Hello and welcome to the Mutual Fund Guide. It's all about your funds and your returns. I'm Vandita Shively. Joining me on the show today is Vaibhav Shah, Vice President of Research and Advisory at Orowealth. Welcome to the show, Vaibhav, and thank you so much for joining us today. But viewers and Vaibhav, before we begin the show, let's take a look at the winners and losers of today. Every day, as promised, we bring you the top funds in various categories, market cap and thematic categories. While it is important to stay invested for a reasonable period of time to make money, it is also extremely important to track fund performances, and you can have a look at your screen. These are the categories. All right, so Vaibhav, before we start with our question and answer session, we are approaching the slack season. That's the time between May to September. And we see that it's the sowing season time, and economic activities are generally dull. They go dull at this time. And we have also seen that the WPI numbers have come out, and that is at 3.2% versus 2.9% on an MOM basis. So how do you think this entire thing will impact the mutual fund space? Because food and fuel have gone a little up. So what are you recommending our investors?
So perfect. So I think, the numbers have come in little higher compared to, what was the expectation. But I think it is in line with, if you look at the more broader picture about what the RBI governors are already, kind of given in guidance, that it is still within the range. So maybe even a number which goes slightly higher on this side will not impact the mutual fund industry, specifically the debt mutual funds, in a negative way.
Okay.
Because it is well within the range. So, the basic, I would say the recommendation for the investors would be that stay invested. Basically look at more of a shorter end of the yield curve.
Okay.
Don't go too long because inflation will be volatile going further, because there will be a slack season. There may be, because even the rainfall forecast for this particular year has been below normal. So in that case, there may be some volatility in the inflation front. So instead of taking any interest rate risk, it is much more better if you can directly play the shorter end of the yield curve. So at least you'll be much more safe compared to the interest rate sensitivity.
All right, thank you, Vaibhav, for giving our viewers that perspective. But let's start with our first email now. That's coming from Sushant Mehrana from Kolkata. He has emailed up his query. He's investing 2,000 rupees via SIP in IDFC Multicap, Kotak Small Cap, Kotak Standard Multicap, L&T Large and Mid Cap, Mirae Asset Emerging Blue Chip, Sundaram Mid Cap, Sundaram Small Cap Fund. He wishes to ask if he should stay invested for 10 years. What is your view about the kind of funds that he has chosen? Vaibhav, over to you.
Sure. So the one thing is that, the investment is across too many funds. Basically, if I look at the complete asset allocation or the asset class basis, most of the funds have a bias towards mid and small caps.
Okay.
So the basic thing is that, in the longer term, because this horizon is long term, mid and small cap normally tends to perform in a better way when you are holding it for long term. Only thing is that mutual fund industry and the whole markets go across cycle.
Right.
So when you have too much exposure towards mid and small cap, which is a very volatile segment, you kind of tend to lose out in the times when the large caps actually perform a little better, which we had witnessed already in the year 2018, where mid and small caps had a beating of around at least 20 to 30% when they were down from their peaks. It was only the large cap which actually helped people to boost out their returns. So my only advice is that yes, you have a good amount of funds, so maybe there needs to be some rebalancing is required, where you can actually sell off or reduce some exposure into your mid cap and small cap stocks and start putting some allocation towards large cap mutual funds.
Okay, so maybe he can choose some large caps.
So maybe an index funds or multi-cap which have a little large cap bias. So that will just kind of make the portfolio a little more stable in terms of volatility.
Yes, so that was advice for you, Mr. Sushanta, and all the very best with your investment journey. Let's move on to our next email that's coming from Mr. S. Joshi from Bengaluru. He has emailed up. He's investing 17,000 rupees via SIP in couple of funds like ABSL Focused Equity, ABSL Equity Fund, ABSL Pure Value, ICICI Prudential Large and Mid Cap Fund, ICICI Prudential Value Discovery, HDFC Mid Cap Opportunity, SBI Magnum Multicap, SBI Small Cap, TSP Mid Cap, oh my god, so many funds. He wishes to accumulate 2 crore in 21 years. he wants to know that what he could do in his portfolio to achieve that kind of goal. But I don't know, I mean, is it possible, even if he looking at the, you know, the kind of SIPs he's doing, the amount, he needs to increase his SIP?
Yeah, I think if he plans to invest or plans to get a target amount of 2 crores over the next 21 years, I think on a CAGR basis, maybe the fund needs to clock close to, I'm not very sure, but at least 15 to 16% kind of a return.
Yeah.
Now again, that's a similar thing which we saw in the past users email also, that again there is a good amount of bias towards mid and small caps. So, and also the number of schemes is too high, so there is a good amount of portfolio overlap between most of the scheme. So actually what has happened is mutual fund itself is a diversification instrument, but when you again invest into too many schemes, it's like diversification of the diversification, which will actually pull down your returns to a lot more extent, because you are investing into different pockets, and which ultimately will you know, kind of create a drag on the portfolio. So it may be possible. I'm not saying that it's impossible to clock that kind of a return, because we have seen in the past that 15 to 16% kind of a return is not impossible in an MF industry. But I think there needs to be some kind of a discipline in terms of the fund selection. So most of these funds are really good performing funds, but maybe he just need to kind of, I would say, reduce some amount of exposures towards these mid-cap funds, and maybe try to build up some exposure towards multi-cap funds. So in that way, he would be able to achieve his goal without compromising too much on the returns, and also mitigating the risk of volatility.
Absolutely. So over diversification he should avoid, and also similar recommendation for him, like the previous emails. All right, all the very best with your investments, Mr. Joshi. Let's move on to our next caller, who's on the line from Mysuru, Mr. Subramanyam Swamy. Hello and very good afternoon, Mr. Swamy. What's your question?
Good morning, good afternoon, madam.
Yes.
Like I'm been investing in real estate fund past 5 years, like access long-term equity. But I want to know whether good fund or should I change the fund?
All right.
Like I want to know about this one.
Of course.
So I'm getting around 30% profit on the fund. But is it okay that percent, or like?
So which method he should use?
Expect more on that thing.
All right. So he's investing in Axis long-term equity since 5 years. He wants to know, is this fund selection okay or not, and which kind of method he should do. I think more or less he wants to know it's SIP, lump sum, what, or maybe SWP or those kind of investments he should look for.
So in terms of looking at the first part of the question, there is no doubt that the fund selection is really good. Axis long-term equity has a tremendous track record. From the time you know, the fund came into inception, it has constantly maintained a consistency in return. So it is not like that kind of a volatile scheme where, you know, in 1 year you get superb returns and next year you know, kind of get some deterioration in your capital. So it has maintained consistency in return. It has I think created an alpha in all the years since the time it has you know, been launched. In terms of category performance also, when it compares to its peers, I think in most of the years it has outperformed the category average also. So with this kind of a performance, with a fabulous track record of the fund manager, with a good amount of consistency in return, with a good amount of AUM, I think it has the qualities of all the, you know, good qualities of all the good fund which a person should hold in an ELSS scheme. So I think that he should continue holding this fund for a longer period of time. There is no such risk that we can envisage in this kind of a fund. In the strategy perspective, I think for a retail investor or for anyone, I think SIP is a lot better strategy compared to a lump sum, because when it comes to lump sum, it also comes to the timing of the market. And I think being a retail and not having that institutional kind of an approach, it's not advisable for us to, you know, wait for market corrections, because there is a very famous saying in you know, equity markets that loss of money was actually lost by anticipating when the corrections will happen, than actually which was lost in correction. So you should not wait for corrections and think that, okay, I should invest in lump sum. I think you should just build up SIP, have a longer time horizon and keep investing.
Right. And what about his ELSS funds? Do you think he should invest another lakh in ELSS fund?
So I think if he has a requirement to meet his ATC requirement for the year, I think he's already invested into Axis long-term equity. So I think just in order to diversify across different approach, I would suggest him either he can invest into a Birla Tax Relief 96 or he can go with DSP Tax Saver. So both have a little different philosophy in terms of managing the funds. So he will just kind of diversify into different strategy in terms of investments. So that would be his only advice.
All right. So Mr. Subramanyam, are you clear with the query?
I'm looking like invest for only ESS fund, right? So it should be fine, right? So I don't need to look for another fund, right?
So yes, we'll ask that question. That's a very important point that he's bringing on table. So there has to be a right asset allocation. So as an advisor, what do you recommend him? Like, should he also invest in debt funds, or how are his allocations in general?
So in terms of, if you just want to have a perfect asset allocation, normally it also depends on the time horizon, the time to retirement, and also all these aspects come into place.
Right.
That is your income dependency and all. But ideally, if you ask me, that if you have at least a longer time horizon, close to 10 years plus, and plus there is not much obligations which you foresee in a short period of time in terms of paying off your home loan or having some immediate maybe a child education expense or something like that. I think closely, if you are a high risk taking investor, maybe kind of a 70-30 equity debt proportion is advisable.
Okay.
Because what happens is, normally, yes, equity creates wealth over a longer period of time, but at the same point of time, you also need some stability in terms of returns, and in terms of growth. So at least 30% debt allocation is something which is advisable, and at any point of time also, if there is a good opportunity coming into equity markets, you can also shift that 30%, say 10% from the debt fund into an equity fund, and try to maintain 80-20 over a longer period of time. And as you move closer to your retirement, where you know that now growth is not important, but that time capital protection is a lot more important, maybe you need to shift the asset allocation to say 50% equity and 50% debt.
All right. We really hope, Mr. Subramanyam, that your query was well answered by our expert. Let's move on to our next email that's coming from Mr. Dulu Diogam. He's from Cuttack, Odisha. He's emailed up his query. He's investing 15,000 rupees altogether in the following funds through SIP. These funds are IDFC Multicap, IDFC Sterling Value Fund, SBI Blue Chip, DSP Focus Fund, DSP Small Cap, Reliance Focused Equity, and Reliance Large Cap Fund. He says that he can stay invested for 12 years. Should he hold or switch? What are you recommending him?
Okay, so I think first best thing that the investor has already decided is having a longer time horizon, which is 12 years. So which is a very right time horizon to invest into equity markets. So really well thought out plan. Also, he has not diversified his money across various schemes having different categories. So it's a very consistent approach which he is following. All the schemes are really good. There is no such red marks or red flags that need to be raised in any of his scheme. And so he is ready to hold it for 12 years. I think that's a very right strategy that he can continue. And I do not see any need to reallocate any of his funds. And he can continue with his SIP.
Okay, and not any kind of suggestion like increasing his SIP amount or something like that?
I'm not very sure on the cash flow part, whether he has some leeway in terms of increasing the SIP. Of course, if he has some amount which he can invest it more, because there is no target amount which he has mentioned which he wants to achieve. So if this is a steady state basis which he can maintain, it's good. If he can increase it, I think maybe he can just start increasing more through some multi-cap funds, because he has a good amount of large and mid combined. But he can also invest into some diversified strategy which is multi-cap.
All right. I'll ask you a very general question lastly, that it is a time that we are seeing that incumbent government is coming back to power again. I mean, markets are already factoring that part in. So what are the kind of sectors you're recommending our clients?
So of course, sector bets are something which are risky. So that's a caveat that everyone needs to understand. That of course, if for a mutual fund investor, it's always advisable to play a diversified theme rather than a concentrated theme. But yeah, when it comes to sectors, I think the first sector that always comes to my mind is infrastructure, because this government has always had a key thrust in infrastructure. Right. So you look at the past budget allocations, you look at the announcement which has happened into the infrastructure space. I think that has been a very clear idea of the government that if India needs to grow and attain that 7 to 8% kind of a GDP growth, I think infrastructure will always play a bigger role. Secondly, of course, the next best sector that people need to look into is the banking theme. With this whole infrastructure space coming in, the capex cycle recovering, and now we have seen a good amount of surgery already happening on the banking side in terms of bad assets and all. And from here, I think that banking sector needs to grow only. So these are the two sectors which go hand in hand, and I think that would be really beneficial for anyone to invest into.
All right, infra and banking are the two sectors that you can look for. That's the word coming from our expert. Thank you so much for joining us today, Vaibhav, and sharing your perspective with us and our investors who are watching us. Well, that's all the time we have on this edition of the Mutual Fund Guide. Save, invest and prosper. That's the word coming in. And stay tuned to BTVI for more news and updates on the other side. Thanks for watching us today.